G'day guys, happy Monday, hope you're all doing well. Hope you all had a fantastic weekend. We'd love to hear what you got up to. Drop a comment below. I celebrated Father's Day yesterday here in Australia. I don't know that anywhere else in the world, maybe outside of Australia and New Zealand, celebrates Father's Day in September, but we do. So it was Father's Day yesterday, so I had a nice day with the family, which is good. And here we are back to Monday. Monday being a public holiday in the US as well. So that will make an interesting trading day. We'll talk about that in a moment. Let's hop on over to the calendar and see what we've got on this week. So go across to the correct week. Here we go. So no news today, being Monday the 2nd of September. It is Labor Day. The markets are closed from 12 p.m. Monday. So not a day that I'd be looking to participate in. I don't think the volatility is going to be there to warrant attempting to take any trades in the AM session. And Asia and London also not interested in today. So I'll be staying off the charts today. I'll probably spectate, as I like to do, but I won't be looking to participate with the Labor Day weekend. Tuesday, we also have 10 a.m. news, the ISM manufacturing. So there's an opportunity to trade Tuesday after 10. And then it's non-farm payroll week as well. So I know a lot of traders have an NFP protocol that they stick by, which is from the Wednesday to Friday. They don't look to participate. I would look to participate personally. I don't mind seeing what the market's giving me, but I do proceed with extreme caution. Wednesday we have JOLTS job openings. So again, it's a potential trade day, but after news. Also on Wednesday will likely be oil inventories. So if we have a look on Wednesday, let's just have a look here. So inventories have moved to Thursday this week, probably on account of the public holiday Monday. So we've got Thursday, and the inventories aren't till 11. So that's pushed back half an hour from when they usually drop on a Wednesday. So it's Thursday at 11. So we can look to participate on oil on Thursday. We'll just drop back here to the Forex calendar. So we've got Thursday, so a ton of news Thursday. Non-farm employment change, unemployment claims, ISM services, PMI. So if you are looking to participate, again, would proceed with extreme caution, but after 10 a.m. And then Friday is the non-farm payroll. And again, looking at trading if you want to, again, with extreme caution, but after 8:30. Okay, it's purely up to the individual if you decide to participate Wednesday to Friday of non-farm payroll week. All right, let's go and have a look at the charts. So having a look at 6E here. I also got myself a new mouse. I noticed that in a lot of the videos, the clicking was irritating me. So I got a mouse that has a quiet click. So hopefully that makes a difference. It might just be me that was annoyed by it, but nonetheless, I upgraded my mouse to a quiet click. And I highly recommend the MX Master. I had the MX Master 3 before. This is the 3S. Fantastic mouse. Helps you do multitasking and shortcut keys on the mouse itself, which is pretty cool. All right, let's have a look. We're on Euros, Euro futures. So price is still located within this bullish FEG. But we have been struggling to get out of it. So when we tapped in on Thursday, we had a bullish bias. We sold off. Friday, we sold off, bullish bias again because we're still located in the bullish FEG, and that actually cost me a trade on Friday. I'll show you that in a second. So we're still in this bullish FEG. Now we have a bullish order block here and potential for price to reach. I would like to see if we are going to fall out of this FEG, if price can respect the order block here and then find an opportunity to move higher. But while we're still located in this bullish FEG, on the daily, my bias will remain bullish. I was looking at this earlier and thought, oh, we might have a bearish breaker here, but we don't actually have the high. So this candle here makes a low compared to this candle. So for that to be a bearish breaker, we would have had to have seen something like this. But in fact, we don't get a swing point here at all. There's just no swing point. Because that could have painted some more context around what price might potentially do. I would still look at this though as a bearish order block. So there is potential for price, if it reaches up here, to reject from that and continue lower. But that's an if and then sort of situation. So for now, remaining bullish as we are positioned inside a bullish FEG. I'll just have a quick look at the weekly. You can see here these equal highs always look attractive for a draw, but we do have a tiny little gap here which also aligns with that daily order block. So we might see price continue lower here, test this level before continuing higher. So we will keep an eye on that. All right, let's have a look at the hourly. We really are just trending down at the moment. We've had no real sign of a reversal. There was a potential reversal here, I thought, that might play out. We had a nice sweep into an important level, and then I was hoping to see if we could get a move above this level here. Then we might see that reversal play out. That might be an opportunity for an hourly unicorn, but that didn't happen. So we are still very much in a bearish trend here. We have change in the state of delivery. Prices respected that level and continued lower. And each time prices attempted to come higher, we've respected bearish PD arrays and continued to move, excuse me, to move lower. So we're looking at this for a point of interest. If price is able to sweep this level, create a reversal, potentially. So still bearish order flow on the hourly structure. We might duck down to the 5-minute. We'll have a look at the trade that I took on Friday. Actually quite like the setup. So we were at a point of interest, hourly point of interest, and this was the setup I looked at. We swept lower here. If we drop out back out to the hourly, we'll just see where that so we had this as our point of interest. We had a sweep of this high time frame POI, this hourly swing low. So we go back to the 5-minute, we'll see that's the sweep. It's also the same level we have for our stop hunt. And then these two candles here, even though this is a doji, it is green, so you use both. That becomes our breaker, our bullish breaker, and we have an FEG aligned. So we do get displacement through this level. What I would have liked to have seen to make it an A+ setup would have been this 955 candle to have closed bullish rather than closed bearish. But for me, it was still a valid trade. I ended up getting stopped out for -1R. Price just wasn't able to push through this level here, although it did try 3 times. And if we go back to the hourly, I'm pretty sure that was an hourly bearish FEG, which was this level here. Price just could not close through that. So we notch that up to a loss, and we review it, and we take our notes and we journal it. Did I stick to my trade plan? Yes, I followed my rules. I took an entry on the 5-minute. I took an entry at New York Open. I had the sweep, breaker block, displacement. You know, all the elements were there for a trade to be taken. Nonetheless, it didn't play out on this occasion. All right, let's have a look at oil. So oil failed this bullish FEG here. So we were bullish on Friday, but we didn't get any bullish. I mean, price started to move and it opened at this level here. We pushed higher, but then sold off with some displacement there. So it was a fairly aggressive sell-off. The failure here of this FEG is leaning me towards bearish price action. So we've failed or mitigated this bullish FEG now. if we were to push back up, I'd be looking for price to respect this bearish order block that we now have, because this candle has closed through the previous up close candle that confirms it as an order block. So I'll be looking for price to respect this level. So if price does push up, that we move back down. So bearish for oil on the daily. So we had a change in the state of delivery through here. It displaced through this level. There is a gap here that confirms it as a change in the state of delivery. So it's a bearish change in the state of delivery. Price came towards this level and failed. And did so quite decisively. And if we also have a look at UK oil, I'm pretty sure we had an SMT at the highs, which we did. And there's also an SMT at this level here. So you can use UK oil as a correlated asset to CL. And therefore, if we have SMT similar to NQ or ES, we can use that as confluence to an idea. So we can see here that this 3 AM candle and the 8 PM candle, we have a lower high on UK oil. And if we go over to CL, we can see that we have a higher high here. This is the SMT through here. So there's a bit of a telltale sign there, or something we could have used to guide or form an idea on where price might be heading. So we have relative equal lows here on the hourly. Be a nice initial target. We also have low resistance liquidity through here and across the lows here as well. So good areas for price to reach for. Again, we continue to respect bearish PD arrays. You can see here the hourly bearish FEG has been respected, with price moving lower. So remaining bearish on oil. So keeping in mind this is a Monday and this video is being recorded during Asia session. So we still haven't seen what London might do or London might provide. But we do have a public holiday today, so I thought it was a good idea to get the video out early. So NQ respected the bullish FEG, and we've expanded higher. So first off, looking for these levels to be taken. We've got these relative equal highs here. Well, they are equal highs. And then targeting this high here, so internal to external. So remaining bullish on NQ and moving to the hourly. So we formed a bullish breaker here. Price created a stop hunt. We expanded through with displacement, leaving this as a breaker block plus FVG, which is an hourly unicorn. And you can see price dipped into this level twice and has respected it each time. We've got this level through here is a great draw on liquidity with all these equal highs. So definitely looking to see price expand. And we have our low resistance liquidity through here, high resistance liquidity on our side of price, low resistance on the other side of price. Okay, let's have a look at ES. So the most recent information was ES located at a swing low, which gives us a bullish bias. And then we have this swing high as a target and the remainder of this bearish FVG to fill. So looking for price to continue to move higher here. So bullish on ES. So with a similar situation here on ES with a bullish FVG, price respecting, a bullish breaker, price respecting that breaker, price expanded through the breaker. So with displacement, so this is a hourly unicorn. Here's our stop hunt. And some nice expansion out of this level as well. So we're watching to see if price can respect this bullish FVG and look to reach higher. Let it come over a little bit. We have all this low resistance liquidity resting through here. High resistance liquidity, high resistance liquidity. And if we have a look at NQ, I'm pretty sure that was an SMT there. Yes, so we had an hourly SMT here as well. So it's a bullish SMT, which helped drive prices higher. So remaining bullish on ES. Have a look at gold now. Okay, so gold has found itself back at this bullish FVG, but this FVG was mitigated. It wasn't closed through, but price did run through it, but it still supported price. So we can still utilize this FVG. Also have a bullish order block here. So until this FVG is closed through, for me it remains valid. What is a weekly showing? So after all-time highs on the weekly, we can see we do have a gap down here. Price may want to come down and grab some liquidity here before continuing higher. However, we are resting at this FEG, and we also have swept this daily swing low. So both instances here are for a bullish bias. So we'll have a look and see if price can move higher here. We've expanded lower already today, so open, low, potentially high, close. So we have got to close below these up close candles here, confirming that as a bearish order block. We'll have to now see how price reacts to that level. Is it able to push through and close higher? If it is, then ideally, if we can get a close with displacement through here, we can get a change in the state of delivery, and that would also give us a bullish breaker. And if we have a look at silver, is there any SMTs? Nothing there at the moment. Similar pattern there on silver. So I'll be keeping an eye on gold, more of a neutral bias on the hourly at this stage. Just want to see how we play out. If we come back up and test this level and continue lower, then that will confirm a bearish order flow on the hourly structure. If we can move higher, then we'll end up aligned with our daily bias and look to be bullish. So Dixie, we got our move higher. Price is currently inside a bearish FEG. And is currently respecting that level. So being this the most recent information we have, I'll be looking for bearish price. So price moving from internal to external. It would be good to have seen price come up here, and it may still do that, into this premium FEG. So it's a premium of this dealing range from this high to this low. We're inside premium here at this FEG, but price hasn't been able to reach there just yet. So we'll see price can just react to this and move lower, or if it will push higher into this FEG and then move lower. But for now, bearish bias on Dixie. Still got our bullish structure here, so no change in the state of delivery yet. We're looking for something displacement through here to close lower, but with the public holiday today, I wouldn't expect too much anyway. These are just ideas. So if we can get displacement here, meaning we leave an FEG, then this could be a change in the state of delivery. We do have a sweep here, so this is high resistance liquidity. This candle's high 101.403. This candle's high 101.397. So we do have a sweep there. And let's go and have a look at GBP. Clear that up. So GBP has failed this bullish FEG and closed quite decisively below. I mean, it didn't even leave any wick to the downside. So that's clearly showing that we want to move lower. We have our next target down here because we swept this high here. So from external to internal, we failed this level. So now we look to this level. So looking for price to continue lower. And if we have a look at the dealing range here, we may even see price reach for a discount, which would put us down in this bullish FEG here. Obviously, that's not going to happen today, but that's just an idea. Let's have a look at the hourly. Okay, so we had a change in the state of delivery. We've got a sweep through here. This was our change in the state of delivery. It's been respected. We've had a few attempts at that level now. It's remained unmitigated and price has continued lower. Bearish PD array has been respected. And we do have all this lovely low resistance liquidity down here that's ripe for the picking. It's also aligned with the -2, -2.5 standard deviation. And even more so down here. If price is able to push lower here and get a close below the -2.5, then we can anticipate price to reach the -4. So overall bearish on GBP. Right, that just about does it, guys. Let's wrap it up there. Thank you for tuning in. I appreciate your support. Please like and sub. Please share the channel around if you like the content. Leave a comment below. If there's anything you'd like me to take a look at, please let me know. I'm more than happy to help. I want to try and provide as much value as I possibly can. So, oh, by the way, just remember that we also have Unicorn University launching today, the 2nd of September, which is very, very exciting. So keep an eye out in the Twitter space. I'm sure Ash will be posting some information. I also have a post that will be going up to celebrate the launch, so keep an eye out for that. There's an opportunity there. Maybe it's a giveaway, who knows. All right, guys, stay tuned. We'll catch you next time. See you tomorrow.